Hey, it's Tyrone Jackson, the wealthy investor from WI Trade School. I am so happy you're taking the time to watch this video. Stick with me here. You're going to want to watch this one. I think the stage is set for you to make a lot of money if you have that financial education. I'm going to talk to you today about something that I don't talk about a lot here, which is mergers and acquisitions. And we've got a big one on our hands. And I'm talking, of course, Disney and their acquisition of 21st Century Fox. Now, you know how much I really like investing in Dow components. You can make great money, particularly if you understand how to invest Dow components and own Leaps options at the same time. But in this lesson, I just want to talk to you about what's happening in Disney because it's not getting a lot of media play, and I wanted to bring the information to you first. This is a 5-year chart of Disney. Now, you know I've liked this stock for a long time. Remember, they are in the theme park business, which is basically real estate, right? When you own a theme park, you have people who you're charging to come in to a piece of real estate for attractions, foods, and a good time. They're also in the hotel business, the cruise business, the motion picture business, and the television business with the Disney Television Network and ABC and ESPN. Okay, the fundamentals here have been very strong. Notice in the last 5 years that the stock has been upward trending, particularly if we start back in 2012. And then all of a sudden, when we get here to 2015, we see this peak, right? And then all of a sudden, the stock starts to give a little and starts a downward trend. Now, from this peak to this area right here in 2017, the question is, what happened to the stock? It didn't look like such a great investment during that period. Well, what happened is the Wall Street money machine, the big money, and you know when I talk about big money, I'm talking about hedge funds, right? College endowments, those big funds that really run the market. That also includes private equity. I've talked about that before. Okay, well, when they buy shares, they buy millions of shares at a time. Because of the ESPN profits, Wall Street was really concerned and they kind of sold off the stock. So any stock that you own, the Wall Street money machine must like it in order for it to go higher. They were not impressed with the earnings and the problems at ESPN because they weren't generating enough advertising revenue. And then you see the stock sort of kind of pull back here, and all of a sudden we get a pop here. Now I want you to pay attention. Watch this. This is the 3-month chart of the Walt Disney Company. Do you see all of a sudden, almost out of nowhere, this upward trend starts? Why? It's because of their acquisition of what? 21st Century Fox. Notice how the stock pulls back here. This is that whole presidential investigation when the whole market pulled back for a few days. Bounces off 104 and boom, it's up to 111. Now, what is going to propel this stock higher? That acquisition of 21st Century Fox. Why? Because Fox's top line revenue will be absorbed into Disney's top line revenue. And remember, I told you this is not getting any play in the media. That's why I want to break this down so that you can benefit from it and you know how to trade and invest when things happen in the market. Now, look at 21st Century Fox. Their ticker symbol is Fox A, right? Now, the shares are only around $35.11, and this is one of those instances when I talk to you about understanding co-relationships. What businesses are doing businesses with other businesses that positively affect the stock. Same 5-year chart here, a peak and then a pullback because you remember they had all that scandal over there at Fox around sexual misconduct and they paid out a lot in insurance. Wall Street does not like that. But if we zoom in on the 3-month chart, isn't that amazing? That looks almost identical to the Disney stock chart when we have all this upward momentum just starting out. See, this is how you win big in the stock market, when you start paying attention to trends and you get that financial education. So here's the Fox 3-month chart. Here's the Disney 3-month chart. Both of them are upward trending. Why? Because of this merger and because of what I teach you all the time, which is co-relationships. You see, you don't have to buy penny stocks to do really well in the stock market. Just understanding co-relationships and how a merger and an acquisition can positively affect a company is a big deal. So here's the Disney 3-month chart. Here's the Fox 3-month chart. And guess what? If this deal is approved by the DOJ, both of these stocks are going to go higher. Why? Because this will make Disney a very, very, very powerful company because they will own all of Fox's assets, and Disney wants to own those assets, put them online, the entire movie catalog and TV show, start their own subscription service. Follow me here to do what? To compete with Netflix. Now you got to remember that on Wall Street and in Silicon Valley, all these big companies are all what I call frenemies, right? Until they partner with each other, they're enemies. But when they want to establish a market and go after something, they do it big. So Disney is buying 21st Century Fox to do what? Knock out Netflix, or at least attempt to be a competitor. So one of the reasons that you probably don't want to own Fox shares right now, rather you want to own Disney shares right now, is because Disney is already an established company and is a member of the Dow Jones Industrial Average. You see, when you have that financial education, or when you allow me to guide you through the market, you know what stocks win to own when and why they're rising, instead of you having to guess on your own. So let's just go through this again. Disney is acquiring 21st Century Fox because they want to launch a subscription service to try to compete with Netflix. And this is going to revolutionize the business because it's also going to change cable TV. So Disney will get millions of subscribers to their service, and guess what's going to happen to their stock price? It's going to feed the top line revenue, and things are going to go higher. You see, when you have that right financial education, you know what stocks, when and when to buy and invest in them. Okay, so remember, this merger will be big. Let's watch it together. Is now the time to buy Disney stock? It sure is. But one final thing I'm going to leave you with. This is not the time to buy a big position in Disney stock, just something small. And as you know, follow the buy signals I talk about constantly so you don't put all your money in the stock. You always let the stock come to you. Now, for those of you who want to follow my weekly trades and have me answer your questions, now is the time to join me at WI Trade School. Trade School is kind of like a mini Netflix where you can follow all of my trades and strategies. There are hundreds of videos in here, but the most important thing is that I will answer your questions on a weekly basis. So if you get stuck in a trade or an investment, you simply send your question into Trade School, and every single week I will assist you and guide you through the market. Now that's exciting because the next 52 weeks are going to be really, really big. We're going to have a lot of stocks break out and a lot of news in the middle of this technological war. So join me, start your membership now if it's right for you at WI Trade School, so that you can not only be an educated investor, you can be a wealthy investor who understands clearly market trends and which stocks to choose right before they break out in a major way.